Welcome, ladies and gentlemen. This is BetterTrades coach Robert Roy, and this is being brought to you by RobertRoyTrader.com. Guys, I wanted to go and take a quick look at the S&P and then the VIX, and then there's one stock that I want to show you guys how it reacted with its earnings that just came out. So let's go ahead and jump into our disclaimer first. Basically, it says, I am not an advisor. I cannot legally tell you to buy or sell a stock. It is against the law. The SEC, which is the Securities and Exchange Commission, requires you to be licensed in order to do so. I am not, and I do not want to be. So if you find candidate, indicator, trade setup, something, anything that you like here today, my suggestion is you paper trade it first before ever putting 1 penny of real money into the trade setup or indicator, and then and only then would you do so if it fits your own personal risk profile and risk tolerance. Now, keep something in mind. Because I am not an advisor, that means I am not under trading restrictions. That means that I may choose to enter or exit a trade at any given time without prior notice. Now, keep in mind that each and every one of the candidates we will be looking at today are for educational purposes only. All right, so with that, let's go take a look at the S&P 500. So, guys, if we look at the S&P, we've got this wedging pattern going on in there. And this, you've seen this before. I've shown this in videos like this in the past. And this long-term uptrend line that we've respected just oh so well, right, is this line, this red line, uptrending line right here. Now, when we look at what's happened before, you know, we go back to 3 times ago, we pierced through on the close and came right back with a big bullish candle. The next time it broke through, closed below it, we came back with a big bullish candle. We closed below it on this day right near the 2000, and we came back with a big candle. And what happened? We rolled back over. So I don't know if we're going to be able to sustain it or not at this point. This may be the break. I can't say at this point. I need some confirmation. We're going to keep our eye on it. But the funny thing is, when I look at the VIX, right, we've got this downtrending line that the VIX is running up into. Every time we hit that VIX, we roll back over. We hit the VIX, we roll back over. So there is a good correlation between the S&P and the VIX right now with what they're looking like. And the one I wanted to show you was Amazon. They announced their earnings yesterday. And what happened? Now, this vertical blue line is the earnings. I really don't want to delete it, but maybe I'll just pull it out of the way and put it back, because I'd like to keep track, like I do here, of where the last earnings were so I could see how they reacted. So Amazon closed right here on this day. They closed at 311.78. They gapped up right here on the open. Came all the way down with the wick to that 341.26 level, went all the way with the wick up to the 359.97 level, and closed 354.53, 5 cents away from the negative 272 Fibonacci level. Guys, very, very powerful how Fibonacci's work and how accurate they are. And this shows it to us right here. We gapped up. Now, the opening price had no real correlation to the price of the stock, or the Fibs rather, to the price of the Fibonacci's. But the low, the high, and the close matched almost with perfection to those levels. All right, and I'll talk more about this in the premium video for the Market Insights. So with that, guys, gals, boys, and girls, have a wonderful day. God bless, and I'll see all of you at the next update. Take care, folks. Bye.